Our energy transitions theme is seeking to address two important shifts in the world. The first of those is the shift in the world's energy mix to address the vital problem of climate change. The second transition is all about a shift in the world's control of oil and the energy mix globally away from OPEC and the Middle East to other actors. And these two transitions are interrelated and they pose a particular challenge for investors in capital markets. Having the energy transitions theme in the portfolio serves a very important diversification role. There are moments in markets where having exposure to this area can be extremely helpful to overall returns. It can be extremely helpful in reducing one's overall risk. So the portfolio constraints of having an energy theme in the portfolio are quite interesting to us. The issue is how we can find the intersection between these names and the parts of the market where the companies can be part of the solution to climate change, not just part of the problem. And that's the critical question that we're looking for. We have extensive communication and engagement with company managements across all parts of the market, including the energy sector. And it's our understanding and our opinion that many of these companies are finally waking up to what they need to do in terms of repositioning their asset base towards cleaner fuels and investing in the technology that can break the correlation between the production of oil and the emission of carbon. And if they fulfill those promises, and they can be part of the solution to this immense challenge that the world has, and they can also be great investments as well. So it's a really interesting moment. It all depends on the company's execution, but again, this is a very differentiated view from the global thematic team. There are three characteristics that we look for when investing in the energy sector. Firstly, we want the highest quality physical assets. That means cheap access to energy, it means high quality distribution, it means good, strong corporate governance. Secondly, we're looking for management teams that understand that the world is changing, that climate change needs to be addressed, and they understand that the world's policy framework for energy companies is not going to be the same as it was in the past, and that they need to be part of the solution as well. And then finally, because this is a very difficult area, we need financially strong companies. So we want companies with strong balance sheets that are throwing off sufficient free cash flow to invest in their existing assets, to invest in new technologies to be part of the climate solution, and typically as well pay out a very strong dividend stream that's helpful to investors. And these companies throw off so much cash flow that they can easily handle each of those three considerations, which makes them a very powerful investment. In trying to solve for these two energy transitions, the transition in the world's energy mix, the transition in who controls the world's energy markets, there are a select number of companies that form part of that intersection and therefore are of great interest to us. In the portfolio, names like BP, who have great free cash flow characteristics, great assets, and a management team that's committed towards finding a climate solution are one aspect. Also, there are companies like Shell that are investing in new technologies, in natural gas, which is a far cleaner fossil fuel, and they too can claim to be part of the climate solution. So BP and Shell will be two examples of names that we see as ideally placed from both an investment perspective and from a policy perspective.